Thank you very much for joining. It's always enjoyable to come to Master Investor Show. We have been here a few times now, and I think this year is in particular interesting. I got a few things to talk to you about. And so firstly, I'm going to give you a recap of the performance. Secondly, I'm going to spend some time on Nvidia, which has been our largest position in the fund and remains so, and we are still very optimistic about the company. I just heard someone saying to me earlier that there was a main speaker on the stage was not a believer in Nvidia, which I hope that I can illustrate why we still believe in it. And thirdly, I want to take you through how we are positioned currently, and there's a lot of things that we were exposed to a few years back and no longer so, and we are seeing new opportunities since we recognize a new regime that has started in 2022. So if you haven't followed the fund, this is the performance since we started in September 17. We analyze at more than 14% a year versus the average global fund at about 8.6, and you see the total return there. So we did quite well since inception in 17 until December 21. We lost money in 2022, and then we recovered very strongly in 2023 and to date. But what is quite interesting is to break down the performance into three distinct periods. So what you see on the right-hand side is the performance since inception until December 21. This is before interest rate increases. So we did quite well in the first 4 years of the journey. We didn't do well in the first 6 months of 2022, and a lot of people still haven't comprehended that the market actually troughed in June 2022, and the market started to recover from July 2022, which is more than 18 months away now. And you can see that the recovery that has been quite encouraging since July 2022 for the last 18 months, that we managed to recover not only all the losses, and we have made more money for our investors. But what is very important to connect these two charts together is some people would say to us, oh, of course you are doing quite well since 2022 because you have lost money in 2022, the first 6 months. You need to understand the rationale behind that. The reason we lost money in the first 6 months of 2022 was due to the one-off valuation reset on higher interest rate expectation changes. And interest rate went up significantly in the first 6 months of that year. But what is interesting, if you look at the interest rate regime since July 2022, so either the US 10-year yield or the real yield, until today, that number has actually gone up. So interest rate has actually gone up from July 2022 until today. So the 10-year before was at short of 3%, now it's short of 4%. The real yield was at about 1% at the time, now it's about 2%. So if you believe that interest rate going up is bad for our strategy, that has not actually materialized. So how would we explain the level of outperformance? Then is, of course, would mostly to do with the very strong earnings power of our holdings, which I'm going to take you one to start with. So unfortunately, I only have probably 10, 15 minutes to run through the full pack, and I would not be able to complete every questions about Nvidia. Is such a big topic. It's now the third biggest company in the world. But there are many things that's going on. So firstly, the way that we invest into a company is we have a very high hurdle in terms of quality of our businesses. So we start with quality, and then we look at valuation. And as far as quality is concerned, this is one of the highest quality company in the world, with the very strong management team, which is still founder-led, net cash on the balance sheet, very attractive value, which I'll come back onto, and a very high quality business model, which is not easily disrupted with the programming language, CUDA. I cannot share more now, but please come to find me. I will be outside the room to take any question to explain to you why Nvidia GPU is not just a piece of hardware that people can come in, replace with. And that has a lot to do with the programming language. But what I want to show you, which is this chart, not sure we've seen it before, basically, it's quite simple. Why the shares has gone up? If we have met in this room in 2022, which we did a presentation at the time, I was tipping Nvidia to be the next trillion-dollar company in 2022. Nvidia's market cap at the time was only $300 billion. So in 2022, the shares went down by over 50%. We were buying more of those shares at the time. In 2022, Nvidia's revenue was at about $27 billion. So let's say we have perfect hindsight and we have a conversation in 2022. If I told you that in 2024, which is this year, 2 years later, Nvidia's revenue is going to be more than $100 billion from 27, what do you think the share price would do? That's exactly what happened. So what you have got here is two lines. The histogram at the back, the light blue chart, is the share price of Nvidia since September 17, when we started the fund. We started investing in June 21 here, and then the share went down. We bought more, and then we made a lot of money since then. But what is important is not the share price. What we do on a day-to-day basis is to try to make forecasts about this blue line, the darker line here. And this line is the 1 year forward EPS, the earnings per share of Nvidia. So what you have seen is Nvidia actually has become cheaper in PE ratio terms compared to sometime in 2021 when we started investing. So what you want to take out from here is Nvidia's significant share price increases have been 100% backed up by the strong fundamentals of the company. Of course, then now the conversation is, okay, Nvidia is going to deliver more than $100 billion. What is next in 2025, 2026, 2027? If you believe Nvidia's revenue is going to come back down to 30 billion, you should sell the share as soon as possible. Like we would want to sell the shares as soon as possible. If you believe that 100 billion is the base case scenario or the starting point, which is our view, then the question to ask is, what is the end number? Is it going to be $150 billion? Is it going to be $200 billion? Is it going to be $300 billion? Okay, with time, right? It's not going to happen overnight. It might take a few years for that to happen. But there's no doubt in our mind that Nvidia is going to be the biggest company in the world, surpassing both Apple, which is only $2.6 trillion today versus Nvidia at 2.2, and Microsoft at $3 trillion in the near future. Okay, whether it would happen this year, we don't know that. But if you ask me to take a 3-year view, I see no reason why Nvidia cannot become the biggest company in the world. So there's still further upside potential from our perspective. But if you don't really follow Nvidia, I would ask how many of you have watched the movie The Matrix? It's been quite a while. It's quite a niche film, one of my favorites. I've seen it many times. And one of the things about The Matrix is, if you ask what is the source in The Matrix, like what is the source that's powering The Matrix? If you haven't seen it, it's difficult to explain. It's basically the humans in Cube that is powering the functioning of the Matrix, which is the AI world, which is the kind of the virtual world that people want to probably live in, and then versus the reality. So if you ask me what is Nvidia today, Nvidia GPU is the source of generative AI. Without Nvidia GPU, there's no ChatGPT, no Microsoft Copilot, no Adobe Firefly, no Midjourney, no Sora, no anything. If Nvidia GPU is not as powerful today, that we will become more powerful in 5 years' time, then we will be talking about ChatGPT in 5 years' time, not in 2022. And the difference, which I think is the biggest misconception in the market, that people still try to relate, just reminded me, those people, that this is the tech bubble during the 2000, right? And Cathy Wood, which I think she got it quite wrong, that she exited the stock in January 2023 when Nvidia's market cap was at $600 billion. And then what she said at the time, which now I fully appreciate that she got it so wrong, was that she said that the real money is to be made from AI applications, not infrastructure. So Nvidia GPU is the infrastructure powering AI, But she said, okay, I don't want more money. Sorry, I don't think there's a lot more upside potential from the infrastructure. I think the real money is to be made from AI applications. So companies that are developing the ChatGPT and all that. And of course, I think she's probably still wearing the same hat back in probably the tech bubble period or during the smartphone era, that the infrastructure is a commodity. The 5G, the broadband, you can change your providers tomorrow. It doesn't change anything. You can still get access to maybe the Netflix, the YouTube, or internet banking, or that is just a bit slower, right? So who cares about the infrastructure as much? But the difference with generative AI, if you don't have Nvidia GPU to run, to be trained on those GPU, the responses that you get are going to be less relevant. So then who is going to use it? If ChatGPT is going to be run on a CPU, which is what you find on your PC and laptop, it might take 2 hours to give in a response. And you're not happy with that response, and you say, can you generate that response again? It might take another 2 hours to come back with another response, and still it's not very good. Because CPU, the computational power, is too slow to comprehend what generative AI is. So everyone can slow down their investment in Nvidia GPU, which at the moment the biggest customers are Microsoft, Google, Meta, and some others. If they decided, okay, I don't want to spend so much money with Nvidia GPU, then the co-pilots that we're getting is going to be less robust. So they go hand in hand. Like the more money you spend on a GPU, the better the response is. The more relevant that is, the more game-changing in terms of productivity, efficiency that you can gain from this. So basically, the one thing you want to take away from me, as far as NVIDIA is concerned, is NVIDIA is the source of generative AI. Without NVIDIA, there's no generative AI. Then we can debate about whether you believe whether generative AI is going to change the world, which we do believe. But that is a secondary conversation. So I just want to spend quickly a few things that you might have seen before this time last year. That what do we have in the fund? So about a quarter of the fund is positioned into AI-related names like Nvidia, Microsoft, Adobe, and Meta. They are doing quite well. They have done quite well for us. But unfortunately, this exposure is quite limited. We only have about a quarter of the fund within the mix of this opportunity. And there's only one NVIDIA in the world, which is unfortunate. And our investment position size is capped at 10%. So we can't actually go above 10%. And over the last 6 months or so, we were forced to reduce our position as NVIDIA become bigger and bigger every day. And our view about the world or the market economy is we are very cautious about what's going on, which is not apparent when you look at the performance of the fund. But we are actually very cautious about what's going on in the economy. The higher level of interest rate is going to stay high for longer. Inflation is still going to be very sticky. The geopolitical uncertainty is going to remain with us for the many years to come. If we don't get another major geopolitical conflict this year, we might get it in 2025. If not, we might get it in 2026. It's going to be, we are in a new regime that everyone are not friends with anyone anymore. We are in the phase of deglobalization, and everyone wants to just think for themselves. So what do you do in this sort of environment? So either you invest into companies that can continue to sell more of their products or services, irrespective of macro uncertainties. Everything I just talked about doesn't matter because they can continue to sell more of their products and services. So these would be the artificial intelligence company. That is it. A few years ago, it was to do with digital transformation, but that is all done now. So it's about artificial intelligence. If you haven't got that, what do you do in the fund like ours? Is you try to invest into companies that might benefit from some of these uncertainties. So this is what we have got. Our energy company we added back in Q4 2022. We believe inflation is going to be quite sticky. Visa and MasterCard would benefit on that tailwind. Interest rate going to stay high for longer. Charles Schwab, which didn't do well for us last year, but we still believe in the company this year. Some selective opportunities in biologics through Sartorius. The one last opportunity I want to take you through is reshoring. So a lot of people have talked about reshoring over the last few years, but if you ask us, there's only one true reshoring opportunity out there. It's through silicon sovereignty. That is it. Like you can talk about manufacturing base shifting out from China to Vietnam to India to Mexico. Like that is not exciting. Like China would still be quite dominant in terms of the production capability. But the one thing that we know today is Taiwan, which is at risk of a major conflict in Asia-Pac, controls over 90% of the high-end semiconductors production capability. If Taiwan disappeared tomorrow, the Western economy come to a halt. We do not get a new iPhone anymore. You don't get the Nvidia GPU. AMD doesn't give you the latest chip. And there's no more autonomous driving in terms of capability. Everything come to a halt, a bit similar to your oil crisis back in the 80s. Like oil was the goal. Now, semiconductor is the goal. So what do you do in that sort of environment? That all the Western governments started with the US, the CHIPS Act, which is about $50 billion in tax subsidy, and the equivalent in EU, which is 50 billion euros in tax subsidy. In total, $100 billion of tax subsidy have been committed by the government. That had been translated into 300 to 400 billion worth of commitments to build new foundries anywhere outside of Taiwan. So we have seen quite a few going on in the US, in Germany, in France, in South Korea, in Japan. And if you are selling the mission-critical equipment like Lam Research, Applied Materials, which is a semiconductor equipment that goes into those foundry, also ASML, which we don't own at the moment, but similar dynamic, that you're just going to sell more of your equipment because we are going to, in the next 5 years, to duplicate what is available in Taiwan. So this is exactly those companies that are benefiting from geopolitical uncertainty. Before, recently, these companies or this sector is quite cyclical. You go through cycles, the end market is smartphone, PCs, autos. Of course, when consumer discretionary spending is under pressure, like ours today, then we have less money to spend on some of these gadgets, and hence the industry should do badly, right? That's our view, that the consumer discretionary spending would remain under pressure for many years to come. But what they have got as a very strong tailwind to counter that headwind is the government interest, very strong incentive to de-risk from Taiwan. So this is what we have got. These are some of our top 10 holdings. You might have seen it on our brochure, and feel free to come to speak with us. And that's all I have today, but I'm very happy to continue our conversation in Nvidia outside this room.